and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sarah Mays, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome back to another episode of Two CPAs and the Mic. We are here covering relevant business and tax topics. We're applying straight talk and practical information without all the jargon and stuffiness that's normally associated with our profession. What's up, Maze?
What up, Frable? How's it going?
Oh, it was great. Great day.
Yes.
In case you don't know, maybe someone's new listening to this first episode. I'm Jeff Frable.
I'm Sarah Mays.
I'm a partner at CCK Strategies.
Oh, what a coinkydink. I am too.
Such a great time hanging out with you. Who's here with us today, Sarah?
We got some KP up on the mic. What up, Christy?
Hello, I am all normal. And what's up with you two?
You know, we've been recording all day.
Frable's been hopped up on some Mountain Dew.
Hyped up on some Diet Mountain Dew.
Yes.
It's one of my vices. Anyway, we are so glad you joined us today. You know, if you join us today, you are getting 3 for the price of 1. We've got 3 amazing topics to cover with one amazing individual. So today we're going to talk about the boomerang effect. And if you don't know what the boomerang effect is, I'm going to refer you to a hit back in 1982 from Men at Work called Land Down Under, right? Because that's where the boomerang, that didn't fly. Okay. So let's just...
Do you want to go try to turn that into the butterfly effect?
That is an amazing... Have you seen that movie?
Yeah, I have.
I love that movie. What about you, Sarah?
I don't know if I have seen that or not.
It's an amazing movie. You need to look it up.
Okay.
Anyway, we're going to talk about the boomerang effect in our industry. We're going to talk about, this is the meat of it though, today. We're going to talk about business valuation, or BV for short. And if that sounds a little dry to you, it shouldn't, because we've got an amazing guest who's just going to spice it up for us.
Spicy.
And finally, we're going to talk about, we're going to kind of go back to that. Be quiet, Christy.
You're so amazing.
We're going back
You're not
to
so amazing.
we're going back to the work-life harmony topic.
Yes.
So
kind of
leave it.
kind of live.
Yeah. Hopefully they need to go back and listen to that episode, because
They do. It was the best episode. Yes.
Our guest today, though, he is extremely special to our firm. His name is Blake Postelwait. Hi, Blake.
Hello.
What up, Blake?
We are fortunate to have you today, Blake. Your time is very valuable. You're a very busy guy. You're very knowledgeable and amazing. And
it is a non-billable day for you.
It is a non-billable. No, seriously, we're glad you're here today, Blake.
Jeff, I'm really excited that you pronounced his last name properly. I like to correct when they don't. So I am so glad you did.
I'm going to tell you the truth.
Okay.
As long as I've known Blake, which has been what? I mean, we've worked together closely for we've only worked together real closely for about 2 years.
Yeah, true.
I always get worried about saying it the right way. So that's
why I just say Blake P.
A lot of people will say Postelwait, and it's like, no, it's Postelwait.
Well, because I think of the postman.
Postal.
I'm honestly just happy when people try, because sometimes people will see it on a list and they look up at me and they just go,
hey, Blake.
Shrug their shoulders like, I'm
hey, bro.
going to attempt that.
Yeah.
So.
Or we could call him
Balake.
Okay.
All right. So
yeah, we can go with Blake P, because you mentioned 1982, and the title of this podcast always reminds me of a Beastie Boys song from like the 1980s.
There you go. There you go.
Because of the on the mic.
Yeah.
Yes.
So it's like Mike D is on the mic.
Mike D.
So Blake P can
Add Rob. Bring it.
So,
You are on the mic.
so fun fact.
we don't need to update our references. The young kids will get it.
Yes.
Fun fact. You know how when you click on something on the Facebook, it like you continually get those kind
On
of
your
posts?
webpage?
Yes.
Yeah.
The algorithm knows you.
So my guilty pleasure right now is all the baby videos.
Oh, tell me. You should see some of the texts I'm getting from this guy.
I cannot stop watching these baby videos. Like this morning, I watched My Cousin Vinny baby video.
Yes.
But the reason I'm bringing this up is because I saw I guess, was that an SNL episode or a skit where they did the Balake and the A?
No, it was Key and Peele.
Okay.
Mm-hmm.
I have no idea who that was. There is. But I had the baby video from this, and I was going to send it to you, but then I'm already sending too many baby videos.
No, you can send that one. I bet you that one's a fun one if it's baby Key doing all of his stuff up there.
You got to check it out.
If he hasn't sent you the We Are the World, it's so good.
Baby Kenny Rogers.
Kenny Rogers brings it all day long.
Do you know any of these, Blake?
Well, I was going to say that name bit that Key and Peele did has followed me like ever since it aired. I'm always Balake. And there's actually a great video that I sent Aaron Spoon, who has also been a guest on this podcast before. Yes. That's like a support group for people that have
with those names
that have.
Good. Glad you guys have each other.
Yeah,
that means a lot.
That's great.
Balake, and I am not in that group because they didn't use the word or the name Jeff.
No.
But have you seen the? I don't know what it is, but they talk about if my name was Jeff, I'd be like Jefflicious, or I can't. I'm not doing it justice. It's really pretty funny.
Okay.
Look that up.
Yeah, no, it's not working right now, but that's okay. All right, Blake. All right, you're on the hot seat today. You are on the mic, and we are going to talk a little bit. Well, first of all, I apologize for this. Tell us a little bit about yourself.
Yeah.
Tell our listeners why they should listen to you.
Why should they listen? That's a very good question.
Yeah. We wonder ourselves, but we have faith in you.
We were talking about boomeranging, right? So I guess that's an appropriate place to start. So I started my career in public accounting here in Tulsa. It's where I live and work. Started out in the public accounting world, about a 20-person firm here in town, doing mostly tax work. And every now and then I would help out the audit team. And at the same time, I was studying for my CPA exam. So did that for about 2 years and passed the CPA exam while I was there, and felt kind of pulled towards the financial statement auditing, and knew that I wanted some exposure to some bigger type clients, more sophisticated issues. So took a job with a larger regional firm and started doing that. I went full financial statement auditing and was a newly minted CPA, figuring things out kind of as I went, learning a ton. Worked at this regional firm for about 5 years and was promoted a couple of times to senior and then to manager. And at the time, I was getting a concentration in financial institutions. So banks and credit unions, doing those audits. And beyond just the normal financial statement auditing, the partner I was working with he was the chief auditor for a large public bank here in town. You know the one I mean, if you're in Tulsa. So
the bank.
The bank, yes, that's right. So
in Oklahoma.
So he not only knew financial statements, but he knew the whole regulatory alphabet soup that banks have to worry about. Wow. Reg A, B, C, D, E, F, G. So I do a lot of that stuff too, just compliance engagements and things like that. So because of all that, I got an opportunity to work for a financial institution here in town, which was a credit union, and their total assets are north of $2 billion. And so pretty large institution, worked in their finance group for about 2 years. And that's when KP called me.
Mm-hmm.
Yay.
Yes.
And she can be very convincing.
She can be.
So convincing.
So had a good chat.
Best call I ever made.
Had a good chat with KP and thought those guys are right across the street from me, because I live right across the street from our Tulsa office. Mm-hmm. And I was like, I might as well go talk to them. And so, interview process went really well. Really missed the energy of public accounting, always working with new people, encountering new issues, and just kind of found my way back into public accounting that way. I would say that the interview process felt very familiar and that it was kind of what was my background and what I was used to in public accounting. But I also got the sense that at this particular firm, you're going about it in a little different way. Mm-hmm. And so that kind of drew me as well.
So we're starting off by kind of talking about this. We were laughing about this boomerang effect. And really what we're talking about is a lot of times individuals in our profession will start off in public accounting, and then they see kind of this grass is always greener on the other side type thing, and they go to industry. Mm-hmm. You did that, but you boomeranged back. And you came back to public. So in each one of those stages, what was going on in your life that kind of made you look to change? Mm-hmm. I mean, I'm assuming it wasn't just money or something like that. Maybe it was. And if it was, just say that. But what was it that made you want to go to corporate and then make the change back? And in our opinion, from what we know and understand of you, is where you want to stay.
Sure. Yeah. So there's kind of a mythology out there, and it was true for me coming out of college. I hope it's not still out there, but the narrative is kind of If you graduate with an accounting degree, go work for a public firm for 2 to 5 years, leave as either a senior or a manager, go get a very cush private industry job, work 38-hour weeks and cash large checks. And that's going to be your life. And so I did not find that to be true in my experience. And again, I missed kind of that constant challenge and constant excitement rather than seeing one set of books, all year long. I like seeing a lot of different sets of books and a lot of different challenges and people.
So for you, it was the variety. It sounds like it was the variety of the work that allowed you that gave you made you want to change.
Yeah, absolutely. Just the mix of work and the excitement and all of that.
Before we go too far into it, I got to tell you, Blake, when we were going through the recruitment process, you were not referred to as Balake.
Okay.
You were referred to as the purple unicorn.
Okay.
You really were.
Okay. What's that mean?
When we looked for special people, people who have that something you can't really put your finger on, but they're so special, or someone who has it all and they have a personality. Oh, and they're really nice too. That was Blake to a T, that purple unicorn who had
I appreciate that.
The desire to grow, who had the professionalism, who locked arms with us in how we value people. You were the package deal. And it was such a cool experience going through that process with you.
So now we just call them the package, right?
Right.
Yeah.
Well, okay, but I have a question too, because I'm a tax girl.
Sure.
And I didn't know you had tax.
Oh,
You started
those
with
are my
tax.
roots.
Yeah. What made you go from tax to financial statement audits?
I think it was just that experience working for the smaller firm, helping out the audit team.
Okay.
It just seemed very interesting to me.
Yeah.
Just kind of digging into all the different areas that you get into on an audit and the team approach and everything.
Yeah.
Yeah.
Nice. Okay.
It's kind of the exposure,
That's something
I
I
guess.
didn't know about you.
Yep.
So Blake, being on both sides of the industry, what are some of the myths that you found to be not true? Not only in the industry side, because you kind of already alluded to that, work 35, 36 hours, cash a big check, all that kind of stuff.
Right.
But what, on the other side, what myths are out there related to public accounting that really just aren't true either?
Oh, I was just thinking financial institutions when you were talking about the myth and working the 35-hour weeks, because what is it about that they say about banking? It's
Banking hours.
Yeah, like deposit rates at 2, loan rates at 3, leave by 4, or something like that. Like golf course by 4, something like that.
Yes.
So anyway, some myths about public accounting.
Yeah.
I would just say that it has to be a short-term thing. I think that's a mythology that's out there. Like if you stay any length of time over the senior promotion or the manager promotion, then you're wasting your time or something. I think that's just totally false. I mean, I was able to get into different practice areas, constantly be doing different things. And that's what keeps my job exciting and fun. And honestly gives me the ability to help more people than if I was just working, one place.
Well, I started off in a local firm, and I never did the big 8 at the time or anything like that, but age. Yeah. I'm not allowed to say that.
No, you're not.
No, I'm not allowed to say that.
I said it.
You said it.
I said it.
Anyway, the thing that I always bragged about was that, especially at a local firm or maybe even a regional firm, that you have the opportunity to do more things than the big firms. And so you get your hands in a lot of different pots and pies before, you're not just doing bank reconciliations or anything like that. Is that kind of what you experienced? Because you've been mostly in smaller firms.
True.
As well.
Yeah, I've never, the big 4 thing never really appealed to me, but I have a lot of friends that have done that, and I'm not putting those firms down at all.
Right.
But just from what I've seen, and we've hired a bunch of people from the big 4, and from what I've seen and what they report to me is that, I spend all my time on internal controls, and that's all I ever see. And, here, just speaking from the audit team, we hire an audit staff, and man, you're going to see the full thing from, auditing cash all the way up to maybe helping draft the financials and internal controls. And no, you're not just going to be editing internal control narratives and walking those through and identifying key controls. You're going to be doing much more than that.
So I don't think we did a good job of really explaining what your role is here, but you came in the assurance department, played a key role there. And then it sounds like you kind of got this bug to grow a book, right?
Yeah.
Become partner.
Yeah.
Which is in essence, the way that you develop into a partner at CCK is being entrepreneurial and growing that book.
Yep.
Talk just a little bit about that mindset, because you've come back over into the tax area. So talk about that process and what you've learned and what you enjoy about that.
Yeah. So I was very lucky in that I was able to be mentored by John Curzon while he was here. He's one of our founding partners. He's the first C for anybody listening that may not know that. And one day during a mentoring session, and this is when I was exclusively working in the audit group, he just took a look at me and he said, "What do we have to do to get some tax and some business valuation knowledge into you?" And I still remember that to this day. And I'm just like, I don't know. Why don't you tell me? You know?
Were you even expecting that question?
No, I was not expecting that. And but I knew where he was going with it, because he's thinking about me managing a book in the future. And
Futuristic.
yes, he is. Is that one of his top 5?
Yeah.
Yep.
Well, the interesting thing is he also made a comment to me when I interviewed with this firm.
Oh.
And we had this, what seemed like an 8-hour interview, but he looked at me, he said, "You need to get out of the boat," making reference to Peter and walking on the water to Jesus. And he said, "Sometimes you just need to get out of the boat." And I'll never forget that comment. That was 25 years ago. So John is a very futuristic individual.
He's got a gift to say a lot with very few words. You know what I mean? Like that.
But he can also say a lot of words.
He can do that too.
We love you, John, if you're listening.
Yeah, in fact, we're going to have John on a future episode.
For sure. That'd be fantastic.
So you're back over kind of in the tax arena. You're still working assurance, but not as much. But you also mentioned this, and this is kind of moving into the second area we wanted to cover, was business valuation.
Yes.
So we have listeners that may not know exactly what that is. So at a very basic high level, what is business valuation and why is it important?
Yeah. So in just very simple terms, a business valuation is the worth of your business, whether that's an operating company or a property holding entity or whatever that is, it's just going to be the worth. So either a dollar value or a dollar range.
At a certain point in time, or?
At a certain point in time.
Okay.
So in the context of me doing a report for a business valuation, it's going to be as of a valuation date. And we're going to explicitly state that.
Is it a future date or a past date?
It's typically a past date, because what we'll do just to start out a company valuation is we'll look at usually about 5 years of financial statements. So balance sheets and income statements. And we will take a look at that and we'll look for any anomalies. And we'll do what's called a normalizing adjustment. So say you've got a company who's paying their CEO an exorbitant amount of money, and you knew that whoever was going to replace that guy was going to be about half.
Right.
We would make a normalizing adjustment to adjust that, down.
To make it to where a market would be.
Exactly.
Okay.
Exactly.
So if I were to simplify it, it sounds like way oversimplifying.
Sure.
It sounds like you have this conundrum of data from all of these years. And you, as a business valuation professional on your team, gather it all together and develop this report, which is a narrative that the non-accountant can understand?
Yes. So the business valuation report itself, there's a couple of different types of reports, a calculation report, which is much shorter, and there's a conclusion of value report, which is kind of the phone book. But yeah, it's going to break it down in a narrative format. I mean, there's going to be exhibits that look a lot like, that they are financial statements, but yeah, we're going to be showing our work and we're going to be explaining how we got there and the key assumptions that we made along the way.
So I'm a business owner and never really heard about this before.
Sure.
Why would I want this? Why is it important to me as a business owner?
Sure. So one of the key triggers for a business valuation would be a contemplated sale. So, I mean, we serve a lot of entrepreneurs here at CCK, and a lot of them, maybe their company is their retirement plan. Maybe they don't have the traditional 401k. Maybe they just want to sell someday. Well, you don't want to go into a negotiation to sell your company without good information, knowing what your company is worth. And that's what a valuation report, whether it's a calculation or conclusion, is going to tell you. Is going to give you good information from which you can negotiate to get a good deal and get your due retirement, your big payoff.
So that's a really great answer to transition us. So what I think I know about business valuation is that it is always done the same way, and everyone always agrees on the value, and it's always for one purpose, right?
False.
Even I know that's wrong.
Spot on. Spot on.
I mean, so that leads us into a conversation about, I mean, value. So fair market value is, what's the definition of that? It's basically the agreed upon price for a certain purpose, right?
Well, Jeff, if I may cite an IRS no procedure 5960 to those following along, the definition of fair market value is really, it's just a willing buyer and a willing seller, the price that they would agree to, and I'm paraphrasing, so don't.
Sure.
Right, don't.
Well, I was going to say that, but
Yeah.
Willing buyer, willing seller, all information being known, all relevant facts being known, nobody's under compulsion. It's the price that they're going to come up with transacting in a free market.
which is different in some situations, because I know, and I'm nowhere near the expert in this, you are, but there's these situations like where you may want to value it high for a particular reason, but there's also reasons why you may want to value it low.
Yeah.
And so that's all part of the conversation that you kind of get into when you do these type of engagements, right?
Yeah, like a divorce proceeding is a great example of that, because say there's an operating company and it's a marital asset because you've got a husband and wife and maybe they're 50-50 partners or something like that. Well, when they get divorced, they've got to divide up that ownership. Right. And so you got to know what this thing is worth. Well, each of them are going to go out and hire an independent valuation analyst, and guess who's going to come in high and guess who's going to come in low. You know what I mean?
Right.
So anyway, you do have disputes like that, or you have areas where for tax reasons, you might want the company value to come in lower.
Right. And what would be a situation where you would want a lower value on your company?
Well, if you're selling your company, you're going to have a taxable capital gain, right? Which is going to be what you've received, your proceeds less your basis in the company. And so if you can get a valuation that would support a lower value, you have less capital gain to worry about.
But you're also going to end up with less money, right?
Potentially.
Right.
Yeah.
What about if you are gifting?
If you're gifting, that's right. So that's another. So buy, sell is a common trigger for evaluation. Gift tax and estate tax is another trigger. So some background on the tax might be helpful. So if you give away some money in your lifetime, the IRS, you'd think that would be a tax-free thing, right? For you, but maybe it is, maybe it's not. So the IRS allows everybody to give away up to $19,000 every single year, completely tax-free.
Adjusted by inflation every year.
That's right.
Yep.
Yeah, it resets every year. And so each of you have the opportunity to give me $19,000.
Nice.
Let me write it completely tax-free to you, because I'm such a great podcast guest.
Yes.
In addition to the annual exclusion, you've got a lifetime exemption. And that's the amount of money that you can give away over the course of your life, completely tax-free. And they reset that every so often. That's up to the whims of Congress.
Which may be coming up at sometime this year.
There's a big, beautiful bill which may ratchet that up really high. But as it is in 2025, right now, as of the recording of this podcast, it's about $14 million. I think it's like $3.99 million for each individual. And if you're married, it's twice
Double that, yeah.
So when we get into this valuing, how many different types of methods are there? And I'm not looking to go into the details of, but I mean, we kind of joked about it's not always the same method, but are there kind of like 2 methods of doing this, 3 methods, 100, what?
Yeah. So before we get to the methods, let me close the loop on the gift and estate thing, because I kind of talked about the tax, but also where the valuation comes into play is when you file those gift tax returns, or if there's a death, those estate tax returns, you have to file a valuation report along with that as a support for the fair market value of the gift or the taxable estate.
Okay.
So that's kind of where the valuation report would come into play with that.
So how many different methodologies are there? Because isn't there like an income?
Yes.
And there's like
there's about three in business valuation methodology, which is the asset approach, the income approach, and the market approach. And I can talk about how those are different.
Well, maybe not how they're different, but does one generally give a better answer than the other? Or?
Yeah. So the asset approach, we talked about the IRS definition of fair market value. Right. So the asset approach kind of provides, if you were to liquidate the company today, you'd sell off all the assets and you'd pay off all the debt, and then that's what would be left. And that's the value of the company. Right. So that's kind of the asset approach. So it's known as kind of like a liquidation or floor value. So that tends to set the lowest value. in the company. It would also be relevant if maybe it's a property holding company where it's an entity that owns a building. They don't really have operations outside of rental income. That's it. You might use the asset approach to value that as well. And it'll provide kind of a lower value. But say you've got an operating company that's much more profitable, it would make sense to use the income approach where they got 5 consistent years of showing a healthy net profit. We would capitalize those earnings using a capitalization rate, which makes sense. I'm geeking out here. I'm pushing my glasses up here.
So after you're finished with this, I do have a question.
Sure.
Well, it's important because I'm sitting here. I'm really interested in what you're saying, but I'm much more interested in the socks that you're wearing.
Okay. Yeah.
Oh my goodness, Christine.
So
Please, if you could see from my vision. By the way, I did text your socks to everyone in my family because
I noticed you taking a picture.
I did. I took a picture of them. From this angle, I can't tell if they are different peanut butters or if
They're hot sauce.
they look like they're hot sauce.
Mm-hmm.
Yep.
You have really good eyes.
Different hot sauces.
No, because I didn't notice the socks.
See, we
I was
all
too
see
busy
the
on
world through
the-
a different lens.
I was too busy on the content of this podcast.
I'm trying to keep it real with people.
She went us.
That's your job.
Okay, so
I love it.
you were talking about the
Hey, you know what?
touche.
This is
So
payback
touche.
for episode 2.
Seriously.
Where she said, well, that was boring, and I'm glad we got around
Do
to
you
it.
know how many times he's been waiting to say that? He's been carrying this
For
around
at least 14
since
episodes.
Episode 2.
Love it. That's a great
It's
callback.
coming. And I'm just going to tell you, I'm really into what you're saying.
Yes. So,
The
but
socks. You said I was going to spice it up, right?
Yeah.
You
And here I am with
did.
the hot
You
sauce.
did. Oh.
he brought it. But okay, you were talking about, because I have this question and it's
Sure.
been spinning. You've got the income, you've got the asset, you've got the market value.
Market, yep.
And I know we haven't talked through all of that.
Sure.
But in that value, in those valuations, do you have to allude to all 3 value? Like if you're looking at a report and you're like, I'm going to use the income method.
Sure.
Do you have to kind of put in like, here's a little quip about this is what the asset method would be.
Yeah.
And then this is what the market method would be.
Yeah.
Do you have to allude to those in one report?
So if you're doing a calculation, or I'm sorry, a conclusion of value report, you have to consider all 3 approaches.
Okay.
That's just the way that that you do it in accordance with the NACFA and AICPA standards and all that kind of stuff.
Okay.
So you go through all 3. They're all 3 mentioned in the report. You kind of show the conclusion of each, and then you make an ultimate decision as the analyst as to what the company's worth
Okay.
based on those.
So, and then you also alluded to the IRS, like that they're the ones that do the fair market value, and that you have to submit sometimes these valuation reports to prove why you valued what you valued. I mean, does the IRS ever come back and look at that?
Yeah. They can be challenged.
Okay.
They can for sure be challenged.
Have you come across a challenge from the IRS?
I have not personally,
Okay.
no, but I'm sure it's probably happened.
They recognize his signature on the
They're like, oh, that's block A.
That's block
I'm
A.
backing off.
block A.
AKA.
I actually just
Unicorn.
attach a picture of my socks with the valuation report. That's like the last appendices or appendix, and they just they're good with that.
Yes.
He's got
Love it.
personality too.
Thank you for appreciating my lens.
Yeah.
So bringing us back all around, thank you, Christy. The question I want to ask is when you do these reports, so let's say you do the value as of December 31st, 2025 or whatever. What benefit is there to a business owner to have this done going forward?
Yeah.
Besides a sale or a transaction, how could that benefit a business owner?
And we do that here. So we do a fair amount of consulting where maybe there's not a letter of intent written or a term sheet or like a known potential buyer out there, but they're shopping their company around, right? And so we've got a guy here at CCK, Josh Coy, who's built out some some really great proprietary models, and they do a lot of great financial modeling kind of on the fly to where you can input your 5 years, your monthly P&L, your monthly balance sheet, and you can basically just value it as of a point in time. Well, if no sale happens or, no action for another month and then the books close, you can drop in a new month.
Nice.
And you can see kind of how that month affects the company value.
So is it possible that based upon this type of consulting or engagement that it might expose weaknesses or areas that are not as valuable in my company so that I might be able to work on those for a future date at some point in time?
Absolutely. I mean, if you know, hey, we launched this new product line this month and the company value went down. Well, you might want to look into the margin of that specific product and see kind of what it's doing to your overall profitability picture.
All right.
Because if we're using the income approach, we're capitalizing earnings, and suddenly you've got a thinner margin, well, that's going to show up in your company value.
Yeah.
Blake, I have a question. In your world, you have to have some independence if you're wearing one hat.
Mm-hmm.
If you do see something like what Jeff was referring in BV, can you advise the client, or are you crossing a line?
No, I mean, you can offer consulting and value the company at the same time. I would say that where there's independence concerns as it pertains to business valuation is if maybe you're valuing a company that's owned by another company. Well, if you're valuing a company A and then company B owns them, you can't also audit, company B and rely on your own valuation because you're essentially kind of auditing your own work at that point. So there's things like that you would need to be aware of.
So I'm a young professional. Maybe I'm in school still, and I'm really digging this podcast, and because it's so great.
It's hilarious.
And they talk about socks and everything. And I'm like, what? This sounds kind of interesting. What kind of person or what kind of strengths and talents would fit well in this type of arena for our profession?
Yeah, so I would say an analytical mind. I mean, you mentioned Clifton Strengths, analytical.
But it is not a hiring tool or a selection tool.
There you go.
That's episode 3.
Yeah.
There you go. But if you find yourself more towards the analytical side or like I'm a learner, I'm also analytical in the Clifton Strengths. So naturally I'm kind of oriented towards this. I would say that the audit background also serves you very well because kind of the first step in evaluation is taking a look at the financials, which are usually on a GAAP basis, and making sure that they make sense.
Mm-hmm.
So that's your foundation from which to build from in order to figure out the company value.
So we throw around CPA all the time on this podcast because there are 2 CPAs and the mic, but we haven't really talked a whole lot about credentials, other credentials in other episodes. Are there certain credentials in the business valuation world, and what are they, and what does it take to get them? Yeah,
so the one that I have for business valuation is CVA. And I always have to emphasize the V because everybody thinks I'm saying P.
Yeah.
I've got one of those too. So CPA and CVA, it stands for Certified Valuation Analyst. And that is the certification of the NACVA, the National Association of Certified Valuation Analysts. That was the credential that John Curzon kind of mentored me towards after I had told him, I want to pursue this BV thing.
Mm-hmm. So are there other credentials as well?
There are others. The AICPA that does, the CPA credential, obviously, they have one called the ABV, which always reminds me of beer. So.
And hot sauce.
Yeah. No.
And so how did you decide on which one you wanted?
I deferred to him, honestly. Okay. I was like, which one's better? And I think for whatever reason, maybe he's biased because he's CVA. He just said, get that one.
Get that one. Get that.
What is the study time for CPA is a pretty grueling test.
Yeah.
How grueling in comparison is the CVA?
I mean, it's not a walk in the park. I think I remember there being 3 sections.
All in one day?
No, I think it was... I'm forgetting it. I'm like, it's like left my brain now. I think it's 3 sections. I think you take them at different times.
Okay.
I could have that wrong. But then this is a cool part about the credential, which you didn't have for the CPA. You actually have to write a valuation report.
Oh, wow.
Of a fake company.
Yeah.
They give you all the information. Huh. And then they grade that. And so I thought that was a really cool kind of boots on the ground.
Yeah.
Like, do you know what you're talking about? Like,
Exactly.
can you actually do this?
That's pretty cool.
So, yeah.
Kind of an essay on steroids, if it.
Yeah.
Yeah.
But I would put it not at the difficulty level of the CPA, but definitely not like something you're going to do in a weekend.
Right.
Right.
Like you got to spend some money, spend some time. So.
Yeah. So Blake, we've been kind of joking around about how we admire you and look up to you. I mean, you've talked about your journey to become a CPA and get here to CCK. You've talked about your expertise in the BV world, and it's growing every day in the tax world for sure as well. But there's another reason why individuals and teammates look up to you here in the firm, and it's because of the way you kind of ground your life. So you're a busy individual, high stress job. You got a wonderful family. How do you ground yourself in all that?
Yeah. So a lot of different ways. My faith obviously. Is huge. Relationships, my wife and my kids, I have to stay connected to them. And then also health and fitness has been a big part of how I do that I really found maybe 2-3 years ago, and I've been really consistent ever since.
So let's dig into that a little bit. How does it ground you? What did you do or find, and how does it benefit you?
Yeah, so I would say it makes a huge difference. I'm a big fan of doing it first thing in the morning. And I know that's not everybody. Not everybody's a morning person, but I wake up and I either go to a workout group that I'm in here locally called F3, but there's kind of chapters all over the country. It's a free men's workout group that's outside. It's kind of faith-based as well. So I do that twice a week. I try to lift weights twice a week. And then I try to go for a ruck once a week.
You ruck?
I ruck.
I don't think I
need what
is ruck?
I not only ruck, I started a small group within F3 where we ruck Turkey Mountain every Sunday morning.
Is that where you put weighted vests on and are you walking like speed walking?
You try to go at a healthy clip, but it's kind of a discussion group. So we're not just like out of breath.
Right.
Because we're talking about kind of leadership principles and stuff while we do it.
Because
so.
I wouldn't call it rucking. I just call it my hot girl walks with my weighted vests. and I walk around our neighborhood with my big weighted vest on. I didn't know it was called
You're
rucking.
A rucker, and you didn't
didn't even know it. Yes.
So is that a weighted vest that you've got on?
Mm-hmm.
Oh,
yep,
nice.
It's a 12-pound vest. It's not
awesome.
one that's, where you can add or take away from to make it is just a 12-pound vest that I wear. And
that's awesome.
How much do you ruck around?
Mm-hmm.
So I either carry a 20-pound plate or a 30-pound plate, which does not sound like a lot.
No,
it sounds like a lot.
After a couple of miles, your shoulders will feel it.
But it helps your posture.
Yeah.
It's awesome.
It's very good.
Mm-hmm.
It's very good for you.
Blake, may I chime in?
Sure.
Blake, you mentioned something about your workout in this group. And I shared this wisdom with my daughter, and it was really timely. And I'm going to butcher it, so I'm going to ask you to clarify.
Sure.
You said in this group, they teach you to lead early and leave early. Will you elaborate?
Yes.
Thanks.
The principle is lead before you're ready, leave before you're ready. Because one of the key principles of F3 is that it's peer-led in a rotating fashion. So when you go, you're not being trained by somebody who does that for a living, is paid to do that. You're trained by your buddy. You know what I mean? And then next time it's your turn to lead. And so, yeah, that's kind of a principle.
I love the principle, and it is no coincidence. The timing of some of our conversations are divinely appointed.
I believe that.
And I have shared that with our daughter, she's transitioning from her senior year in high school, top of the world, top of the mountain, going into this, okay, where do I fit in this summer? I've got all these things going on, and where do I fit? I'm not going into my senior, I'm going to my freshman year. I don't know what to expect. And this conversation came up, and I shared the example, the scenario, and it was perfect.
Yeah.
She got that because we were talking about, do you continue with this youth group that you've been leading, or do you empower another leader to go ahead and step up like you were so empowered?
Yep.
And it was that conversation that really led to some meaningful decisions for her.
Yeah, I love that. Because I was over a site within F3. We call them AOs, areas of operation. So I was the AOQ, which is kind of the leader for that site for a year, and that's the term. Like, so you're done in a year. And I felt like just as I was figuring out how to do it well, it was time for me to stop doing that, and I had to pass it on to the next guy.
That's so cool.
So
That's so cool.
Got to leave before you're ready.
So we talked about the physical fitness part of it, but there's also I'm not going to call it diet, but how important is what you put into your body?
Yeah.
And how is it possible to resist the cake in the break room?
Well, if it's chocolate cake and you're Jeff Frable, I don't know that it is.
It's okay.
Everything in moderation.
Mm-hmm.
Yes, I agree with that. And I will also say this is probably where my hypocrisy comes in because I can't live up to it. But the best, it's those wafer things.
Oh, those
chocolate wafers in the break room. That is like my smoke break. Like every
You know what
day.
they are.
The Nutter Butters?
Yeah, Nutter
They're
Butters.
not Nutter
Or
Butters.
the chocolate covered Nutter.
They're chocolate. They're more like Nutty Buddies. Well,
Nutty
I think they call them Nutty Buddies.
Yes.
the Little Debbie.
They're
Little Debbie
so
ones.
good.
Yeah.
Little Debbie's. Yeah,
I might eat one of those a day. I'm not even kidding.
Yeah.
They're good.
Well,
They're so good.
A pack of 2 a day?
Well, whatever package it is.
Hey, there's
That's
two in
what
the
I
I
just call it
See,
one.
Whatever
I
the
think it's
serving
okay to call
size.
it one.
Yes. My
One's fine.
downfall is Nutter Butters, and Aaron hooks us up with the Nutter Butters every once in a
Yeah,
while.
but I would say my one guardrail in the diet arena is just to prepare beforehand.
Good point.
So like on Sundays, I'm a weirdo and I eat the same thing every day for breakfast and for lunch. My wife makes fun of me, but like, I eat eggs and toast for breakfast, and that's just automatic every day. I do that, and then for lunch, I eat my like knockoff of the Chipotle burrito bowl, which I make on Sundays. So it's just that
So you
preparation.
food prep.
I food prep.
Yeah. Well, no, you're definitely right. It's a matter of being prepared, because when you don't bring your lunch and there's a big old chocolate cake in the break room, it's just
It's
makes
tempting.
sense. It's well,
Your mouth is salivating.
Good.
that makes it
Yes.
sound like there's a decision to be made, and there's never a decision to be made in my mind. So
Yeah.
anyway,
Well, there's a quote I once heard, which I love. It's discretion is a cage with velvet ropes. Well, velvet bars, excuse me. Discretion is a cage with velvet bars. So the velvet bars make it seem very comfortable and enticing. You got all this choice in the discretion, but really it's the optionality, and it just opens you up to make the wrong choice.
very deep.
If I prepare beforehand, my decisions are limited. I know that my lunch is automatic.
There you go. Yep. What's that? Free will. Yep. That's a whole other discussion, right?
Christy's trying to whisper on the mic.
Yes.
No.
Sorry.
Well, she
My whispers are like this. I'm very.
All right. Last question, Blake. We talked about physical fitness. We talked about diet.
Yep.
What about sleep? How do you that's important to you. How do you prioritize that?
Yeah.
Because it's not like you are an empty nester. You have your daughters are
2 awesome
young
daughters.
Yeah. So how do you? It's not an easy thing to do for a dad in your position.
That's true, especially if you're waking up as early as I'm waking up. So I think prioritizing sleep is big. I'm usually I have an alarm on my watch at 9 p.m. to where like that's my time to start shutting it down. And so I'll go to sleep anywhere from 9:30 to 10, and I'm waking up at 4:30 to 5.
Yeah.
Pretty much.
Yeah.
So that's kind of that's what I do.
But that it's like anything else becomes you have to make it a priority.
Yep.
If you go into the day or the evening saying, well, I may or may not, it generally you'll err on not. And
Yep.
so it really just has to be a priority for you.
Yeah. But the reason the early morning thing's important is because what I've experienced, especially as it pertains to work, is you spike those cortisol levels in the morning doing your workout, your heart's going, you get all the feel-good endorphins and all the good brain chemicals that come after that. You go into the office and it's like you're just shot out of a cannon.
Yeah.
And you're just ready. You've already done something really hard that day. So then it's like by the time you start answering client emails and working on project work, you're just ready.
You're ready.
So do you,
Yeah.
do you experience what I experience sometimes, where you do your exercise, you take your shower, you get dressed, you get in the car, and it just like pours out of your pores, and you come into the office all soaking wet from sweat?
Yeah.
Because
Sometimes
the Oklahoma humidity.
Sometimes once you start sweating, it's hard to stop. So,
Yes.
that's tough.
Yes.
Well, Blake, like I said, you are an example to many of our teammates here. They look up to you've got a very compelling story with how this fitness has played into your life and what it's brought you through. And so we really enjoy you sharing that and telling us about the BV area and sharing your expertise there. But really what's most important about our episode is Sarah Mays's
Rapid fire.
questions.
Yes.
I was just going to say how disappointed I was that we didn't even get into EBITDA multiples.
Oh, no, I want to talk about your t-shirt.
I had a
Can you tell us about your
let's do
t-shirt?
your t-shirt.
You've got to
mention socks.
Let's go with your t-shirt.
I have a t-shirt made by my buddy Lucas Sundahl. He has a lifestyle brand called Accounting Couture.
And it's hilarious.
Yes, it is good.
And it's very, very great. And I bought one of his shirts that just says EBIT Dad on it. And the font is the same font as what's on the US dollar.
Oh,
And so
nice.
For those who don't know, what is that?
So EBITDA is a financial accounting term, which is your earnings before interest, taxes, depreciation, and amortization. And so that's the technical term. And then the dad part is it was a Father's Day gift.
It's hilarious. It's
Dad.
funny.
Who did you mention?
Lucas Sundahl.
Okay. who is this dude?
He used to
work
at CCK.
He did?
He has his own business now.
Yep. And
Really?
I knew him through church, but yeah, he used to work here.
Okay, because like he popped up on my LinkedIn.
Oh, he's all
Because
over
of that
on the
connection.
LinkedIn.
Yeah, on
Yep.
the LinkedIn. Yeah.
He's very active on LinkedIn.
Yeah.
Okay. Well,
Yes.
Lucas, if you're listening and I haven't remembered you, I'm sorry.
Yeah. Eba dad.
All right, Sarah.
All right. So I'm going to ask the first question, but you already answered it. So I'm going to make it easy for you.
Okay.
Because you already answered it while we were talking. Morning workouts or late night workouts?
Morning.
Yes. All right. This one's just for you. Do you log more miles or billable hours?
Today, miles.
Nice.
Yeah.
All right. A coffee or a protein shake?
Oh, coffee, 100%.
Right. Good. And what's more painful, burpees or busy season?
Burpees.
Yes, for real.
Yep.
And lastly, what is your ultimate workout song? Like one that you play on repeat?
Ooh.
Please don't say Eye of the Tiger.
Well, I just watched Mulan with my daughters and wife.
Yes.
And there's this song in it called
Let's get
Make a
down
Man Out
to
of You.
business.
Oh,
Yeah.
Oh,
To
Mulan.
defeat.
Yeah, Mulan. Yeah.
The
Mulan.
Yeah.
Yeah. Good
And
one.
and my wife and daughters were like, "You need to play this at F3." And I'm like, "There's no way I'm playing this at F3."
Oh, no.
Hey,
What?
do it on American Ninja Warrior.
Yeah.
There's a guy that always had this going every time he was racing, and people would ask, "What do you have playing?" And he's like, "What's the name of the song?"
I'll make a man out of you.
Yeah, yeah,
But
that's
it's
it.
good.
I am kind of flabbergasted that you have just seen Mulan.
Okay, I missed a lot of Disney growing up.
Oh, Mulan is a classic.
But did you
My
watch?
brother is 4 years older than me, so I always had to be at his level of entertainment. So I missed out.
You missed on being a little
Childhood.
kid. Yeah,
But did you
yeah.
watch the live action, or has it already come out, or is it about to come out? The live action.
I'm not sure.
one?
I watched it. I would
it
stick
a
with the
live-
animation.
Okay.
So good.
Okay, there you go.
See, my kids grew up in Tarzan, Beauty and the Beast,
Yep.
Mulan, and so it's a very special
Yes.
movie to me. So,
One, you're also a Disney nerd, so
yes, I am a Disney nerd.
Yeah.
So,
But it is such a good movie.
so, Sarah, I was just going to say, you have really stepped it up on the rapid fire questions.
I
mean,
know.
it's like you're actually thinking about it now.
Was that all of them?
Yes, we
I'm ready for
limit it to-
more.
You want some?
they're really good, aren't they?
Yeah.
She's
I
really,
can ask
she's
you
really,
what I asked the other
Sure.
guys
do it.
today. Oh, this one I really like. This one I may ask it more. If you're going into a new client meeting, what would your walk-up song be?
Ooh. You know how Morgan Wallen does those walk-up songs
Yes.
at his concerts?
Yes.
What song does he play? Oh, you know what would be cool? The Ramones used to walk up to this, going to old music.
what I like about you.
No. They're
Oh, Ramones.
Blitzkrieg Bop. They did the old John Wayne that
Oh,
that song. That song. I don't know.
got to have that clip.
Yes. Yes. We will get that clip and we will put that
Yeah,
in.
there you go.
Yes.
We'll find it. We'll find
And
it.
then if you, what did you, I'll ask the last one and then Frable, so he'll know for sure this is the last one. What did you want to be when you grew up?
I was a very practical kid, and I thought that there was nothing more important than the mail, and I wanted to be a mailman.
That's awesome.
That was actually that's literally my answer.
Think about it. That's
This was-
awesome.
Postal.
This was
wait.
pre-email.
Postal.
This was pre-
Wait,
Postal.
that's hilarious.
Wow.
That's
That was
cool.
my answer in kindergarten.
Good,
That's
Sarah.
awesome.
Did you want to be the guy who walked around the neighborhood delivering the mail?
Yeah. that was
Okay.
me.
Yeah.
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 Would you have walked or driven?
I mean,
You got to walk.
I've never seen him on foot.
You've never seen
Oh,
it
no.
on foot?
My
I've only seen the
cousin-
little skinny.
No, my cousin is a postal worker and
Okay.
he does walk. He's in Omaha and he does walk the streets of
I
Omaha
feel
and
like that's
delivers
asking
mail.
for a dog bite.
That's where
Yeah.
the original, neither rain nor snow,
Oh,
sleet,
okay.
and all that kind of stuff
Yeah.
came from.
Yeah.
So,
Okay.
Yeah.
well, we certainly learned a lot today. We learned about business valuation. We learned that Blake Postelwait wanted to be a postal worker.
There you go.
And that Blake has the really coolest socks
Socks.
around.
Socks.
But if you really liked what Blake had to say and thought, man, this guy sounds like a really cool person to work with. Drop us an email at podcast@cckcpa.com. If you really want to encourage Sarah with her rapid fire questions, drop us, or you have a good rapid fire question, drop us an email at podcast@cckcpa.com. Special thanks to CCK Strategies, our primary sponsor, for giving us the ability to utilize this platform. KP, Christy Porter, thank you so much for showing up. And to Rob, did I thank Rob? I wonder if I missed Robert on the last episode. Sorry. Robert Mays, double thank you for your intro and outro music, and also for allowing Sarah to do her thing with her weighted vest in the neighborhood. Clarence Fisher with Tulsa Internet Marketing Services, thank you so much. And Natalie Renfro and Emily Johansson, thank you for helping us get the ball across the goal line every time we do these episodes. With that, we'll shut down for this episode, but we hope that you join us next time when these two CPAs get together to have a chat and you get to find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs in the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.